So today we have Soren in the studio. He's 23 years old. And Soren, how many properties do you have?
We have over 60.
60 properties. Man, get the out. So guys, it's Soren in the studio, 23 years old, and 60 damn properties. So Soren, what kind of properties do you have?
So we get about 38 duplexes and single families, and
Okay.
then we have a larger apartment complex as well.
Okay.
24
so
units.
Between single families and duplexes, you have 38 doors.
Yep.
And then the 24 is a multi-unit,
Yep.
right?
Yep.
Most of them are in Chicagoland area.
Yeah, they're all.
They're
we
all
have two in Chicago proper, and then most of them are going to be in the suburbs.
In the suburbs. Okay, got it. All right, so let's get started. So how did we meet the very first time? What do you remember?
So my dad invited me to go to a 3-day conference.
Okay.
You were hosting it, obviously. So we went Friday, Saturday, Sunday. I actually skipped school on that Friday to go to the conference.
And how old were you?
So when we met, I think I was 17.
17, okay.
Yeah.
And you are 23 now.
Yep.
Right? So the last basically 6-7 years of your life, right? And at 17, where were you going to school?
I was high school at Wheaton Academy.
Wheaton Academy. So for anybody that may be from the Chicagoland area, this is supposed to be a good Christian prep school. It's kind of what it is, right?
Yeah.
Right? It's a very, very square kind of, you go to good school, private school, and then you go to college,
Yeah.
right? And did you make it to college?
I took a couple classes at a community college, and while the lecture was going on, I was looking for properties, email, and writing offers. So decided it wasn't right for me. So I took a couple classes, but didn't pursue it all the way.
Okay. And you don't come from a necessarily wealthy family by my standards, right? You come from people that are hardworking small business owners.
Yeah. Yep,
That's
my dad
what-
owned a
I mean,
small business.
yeah.
And yeah.
Your
I'm
family is kind of aunts, uncles. You guys are connected through that way, correct?
Yeah.
Okay.
Yep.
Got it. So 17 years old. Now, let me ask you this. You're obviously gung-ho about real estate.
Yep.
Most people, right, that are 17, 18, 19, 20, either they're going to be the next Mr. Beast or the Instagram models, or they're like, man, this is bullshit. Landlords shouldn't own all these properties. We get these comments on these podcasts, like this is so unfair. What the hell is wrong with you?
It goes back to, I think, when I was really young, actually. If people ask me what I wanted to be when I grew up, we get that question a lot, right? And when I was younger, I didn't really have the confidence to answer that honestly. But in my heart, I was like, I want to do something in business. I don't know what it is. I had this picture of carrying a briefcase in Chicago. I didn't know what that really looked like, but
Sure.
I figured I want to do something in business. But I always said I was going to be an engineer. I was pretty decently smart, got good grades.
And you could have gone through, easily you would have become an engineer if you wanted to. You could have easily got into school and all that kind of stuff, right?
Yeah.
You had the brains. Okay.
Yeah. So, since I was really young, I always knew I wanted to do something in business. And then going to Wheaton Academy, I really kind of grew in my confidence in like, okay, maybe this is something that I actually can pursue and can do. And then just being around you and other people who invest in real estate, really seeing that aspect of things. And it started off partnering with my dad. And so I'm super grateful for that partnership. We got 10 properties in about 2 years together. And that kind of kickstarted the whole journey. And now it's just, let's scale this thing.
Okay, got it. So at 17, I remember one of the first properties, if I remember, right, you guys were from Gold Mastery and you guys showed up to a property in Winfield?
Yep.
Winfield, right? Wreck of a house, right? Not necessarily the best or the easiest house to start with, right?
Yeah.
And you showed up in your soccer uniform. Literally, you're a high school kid and you show up in your high school uniform. And I'm just, in my mind, I'm like, here's your dad. He's probably dragging his son to come to, hey, son, look what I'm doing. Was it that, or was it that you wanted to learn at that time?
No, I definitely wanted to learn.
Okay, so
Yeah.
it was not something that your dad was kind of kicking your ass to come to.
No, it was like, he invited me to the 3-day, but I think that's because I expressed interest in business and in real estate before that. So
Got it.
he was like, we're going to this thing together. It wasn't like, he wasn't forcing me. It was like, let's go together. And
Got it. And
I wanna
what was
learn.
the conversation like talking to your parents saying that, hey guys, thank you for, sending me to Wheaton Academy and everything. but now I'm going to do real estate full time because your parents are pretty conservative people, right, in general. So that could not have been a fun conversation.
uh, yeah, I mean, I think like originally they wanted me to take a couple of classes at the community college, so I was happy to do that. And then kind of when things kept growing and growing, then I think they realized that no, this is a great path for him. And I mean, I'm so thankful that I went to Wheaton Academy. Like, I wouldn't be the same person I am without that. And kind of for me, like, I kind of view that as my college. Kind of, I don't know,
Sure.
like.
Sure. Well, was that like basically like leadership skills? Was it kind of, what do you think you learned there?
Yeah, definitely leadership skills. Like, even just like grew in a ton of confidence. I'd say that's a huge thing.
Okay.
Like, I mean, before that, I didn't really think this was possible, and grew a ton in my faith as well.
Sure.
And that I mean, that plays a huge role in what my wife and I do now.
Right.
And yeah, just like obviously I grew intellectually as well.
Right.
So in kind of a lot of different areas of my life, I
But you
grew.
think that's why you started taking life seriously at a very young age? Because you already got married,
Yep.
right? You got married last year, was it?
2.5 years ago.
2.5 years ago.
Yeah.
Okay, wow. So you got married early, right? And clearly you do not come across like most people that are 23. I mean, that's just a fact of life. So you think that growth happened because of kind of schooling?
Yeah. Yeah. And I've always been like kind of a serious person. Like, I always took whatever I'm doing seriously.
Okay, got it.
And yeah, I was never really like goofing off, just
Got
living
it.
life for the
Okay,
fun
so
of it.
let's kind of talk through your first couple of deals, right? The Wheaton property, the Winfield property that you bought first. That was kind of a JV. You're still in high school at the time, right, with your dad,
Yep.
right? So that was kind of your training wheels sort of thing. And that property, what did you guys buy it for?
We bought it for $50,000.
50,000. And how much did you fix it for?
We put 75 into it,
75 into it.
and then
Okay.
yeah, it appraised at 220.
220. So you're buying a 50, 75 into it. You're in it for 130 or so, 220. So a huge win.
Yeah.
Now, did you guys sell the property? Did you guys keep it?
We kept it.
Okay.
And there's actually a funny story. So it was rented out for 2 years,
Mm-hmm.
and then when my wife and I got married, we moved into that house.
Oh, no kidding. You guys
Yeah.
moved into the house.
Yep.
Nice,
We just took over
man.
the payments, and it was a great house for us for 2 years. We lived in it, and then found
Yeah,
something
you
else.
know, and this is something interesting because we were having this conversation. We started with this, right? Oh my God, landlords are evil and they shouldn't own this many properties. This is unfair. Why do you think a lot of young people look at life that way? Instead of saying, hey, maybe buying a small little property, putting some sweat equity into it. I mean, this is the good old way of how every immigrant, they would live as combined families and grow. Right? Why do you think there is this sense of almost like resignation or resentment today?
It's a good question. I mean, I think, yeah, a lot of people nowadays, they don't really want to work hard.
Okay.
They want things handed to them. People online, post these crazy stuff. Oh, look at me. I'm 18 years old. I got a Ferrari and a Bentley,
Right.
and, I
That's
trade
southern
for
extreme.
2
That's-
hours. And
yeah.
Yeah. So, like, I mean, I think people see that, and I mean, I think obviously, everyone wants to live their best life, and
Sure.
they see these people, and I don't know. I mean, I don't want to put words in people's heads and speak for people.
Yeah.
I don't really like to do that.
But it's interesting because I see two dichotomies. One is that exact thing that I make YouTube videos and now suddenly I got a Ferrari type of thing. People don't understand the backstory. Once in a while, clearly there are some people, be it the Mr. Beasts of the world, there are some people who are exceptionally talented, right place, right time, work their ass off. There's a multitude of reasons and may grow to that level. A lot of that is complete bullshit. Right, complete bullshit. And then I think on the other side, a lot of it we see is this idea of people are basically just giving up. They're like, oh my God, my life is over. I'm 18 years old. I'm 20 years old. It's never going to be possible for me. Right? I don't know if it's their family, if it's the general outlook in the media that, oh my God. I mean, at 18 years old, you're resigning for your life. That man, this is not, I mean, it's just sad. Right? So you do that first deal. And why did you guys not sell the property? Because at that time, you guys are going to make, at least $70,000-$80,000.
Yeah. I mean, from the start, we knew we wanted to rent it. We knew our game plan was to build up a rental portfolio. So going into the property, we knew what we could rent it for. and that was our strategy, right? And I mean, with every house, you could always sell it and make money now, but we knew, if we acquire more and more and build it up, then that would be a long-term play. And obviously, I was young, and so I'm like, let's do this thing for the long term. And still, kind of that is our mindset: is let's build this right now, and we're going to be in it for the long term. My wife and I are both young, so we have plenty of time to build it up and let it grow. And it's easy to take the quick profits now, but you can spend that money in a day.
Right.
So we're in it for the long term.
Got it. So you guys kept that property, and then how many properties did you do before you were like, man, I think I can do this on my own?
So my dad and I got 10 rentals together.
Okay.
We did a handful of flips in there as well.
Okay.
Just to get me some money.
So your dad is running a full-time business.
Yep.
Right? I mean, he's busy with his own thing. Where are you sourcing properties?
So still to this day, the majority of the deals we get are on the MLS.
On the MLS, even today. I mean, we're recording this early 2025.
Yes.
Right? First week of January, pretty much. And all this time, right, for the last 6 years, you've been getting properties on the MLS.
MLS and through wholesalers. Yep.
And through wholesalers.
Yep.
Now, this is a big issue because, I mean, clearly people tell me all the time, Andrew, you don't understand. I can't find a property, right? I mean, are you special? You have special hookups? How are you finding properties on MLS?
So this is actually something that I've been thinking about a lot recently. A couple different thoughts there. Number one is, I mean, I think on social media, people promote like, oh, you can find way better deals off market. And it's like, if you want simple, repeatable, good price deals, like they are available on the MLS if you write enough offers. And so, like I said, we wrote 800 offers in the past 2 years. And so we really want to help other people do the same, right? And I understand people don't want to write 800 offers or 400 offers every single year, but I actually have a video. It hasn't gone live yet, but it's going to go live soon, where we would like to help 10 or 15 people who want to write 10 offers a week write those offers in a repeatable, easy way, right? A lot of times people call up these different agents, hey, can you show me the house at 12 p.m. on a Wednesday, whatever it is, right? And if you're looking to scale, I don't think that's feasible, right? If you're looking to scale, you just got to get it out there, and maybe you'll miss one or two, but the ones that you will get, you're going to go far beyond than the ones that you miss. And so if you're interested in writing, 10 offers a week, like reach out to me. Maybe you can put my info in the basement or in the comments.
Well, I mean, it's a good time, actually. How do people reach you?
Yeah. So I would say my email is probably preferred. I get a lot of texts. So that is Soren Bailey, re@gmail.com. So first name, Soren, Soren Bailey, re@gmail.com. So email us, and we'll be happy to share experiences, share thoughts, whatever it is.
So reach out. I mean, if you're serious, right, please don't waste his time, his wife's time. But if you're somebody who's genuinely serious and intends to buy a bunch of properties and you want the help, right, you guys are willing to do that.
Yeah, and the goal would be efficiency. Like, we'll have a system where you can, I already have the Google form. Type in the price, type in the address, how much you want to offer, upload your proof of funds, and we'll send it over to the agent right away. And it's just like, find the property, upload it, we'll get it sent over to the agent, and it'll be easy for everyone, right? The last thing I know everyone's busy, right? You're a busy guy, everyone's busy, and so we want to make an easy, efficient way to really scale your business and scale the amount of offers that you're writing.
Got it. I mean, that is awesome, right? That is awesome. So now you don't have an excuse if you're listening to the podcast. Now, how do you guys identify a property, right? Let's start with, like if somebody comes to Mastery, somebody goes to 3-day, first thing we talk about is area selection, right? And I remember early on when I think I was talking to you and your dad, you guys are like, oh, we want to move closer here. And I'm like, no, if you can find properties farther that way, meaning farther west of city, you're going to generally have less competition, right? Generally, because not as many people competing with you. So where do you live now?
Now we're in St. Charles.
You're in St. Charles now.
Yep.
Okay. So you're basically in St. Charles and you're kind of investing out west or towards Chicago?
Now we're towards Chicago.
Why?
Just... there's a lot more distressed properties over there.
Okay, more opportunities.
Yeah, even though there is more competition, there's also just more volume of houses over there.
Got it. Okay.
We're open to, really, we'd be open to out west too. We've written a lot of offers out there. just kind of the ones that we have been able to get are closer to the city.
So 400 offers a year. So pretty much 365 days a year, right? There's a couple holidays in between. So pretty much you're writing an offer and a half to 2 offers every single day. Mm-hmm. Is that correct?
Yeah, usually it'll be like, we write like 10 offers in a bunch, every couple of days we write 10 offers.
Okay.
But yeah, it equates to that.
And you're basically emailing to the agents, then doing follow-up, pretty much.
Yep.
Okay.
If we don't get accepted, which most times they don't, as you know, then it's, hey, keep our offer as a backup. And I mean, as you know, a lot of people will call you back.
Right.
Previous deal fell through, the house has just been sitting there for a while, and they could give you a call back, and then you pick it up at that point.
Got it. Okay. So if you're writing 800 offers, out of that in the last 2-3 years, you bought, let's say, for 35 properties or so? 35, 40
it
properties?
equates to about, we have a 3 to a 5% acceptance rate.
3 to a 5% acceptance rate. Okay.
So right in there.
So for the audience, like listening, guys, right? That means that if you're writing 100 offers, right, on an average, 4 of those offers are getting accepted.
Yep.
Right. And this is where a lot of times that separates basically the boys from men, right? Is that, guess what? That means 96% of your offers are getting rejected. But when you look at the yield, meaning how much money do you make, right? If you write 100 offers, that means you only bought 4 houses, pretty much. But each house that you keep as a rental, how much equity would you say you have in terms of money?
Just per house?
Per house. Ballpark. I mean,
30, 40,000?
At least.
Yeah.
Minimum. This is
I mean, we buy, cheaper houses. We're on the lower end of the spectrum.
Okay.
Yeah, somewhere around there.
30, 40 houses, right? So think about what does that account to? Let's just say it was, clearly he's buying more than 3 houses a year, right? 4 houses a year. If you bought 4 houses, that means $160,000. You divide that by how long it takes you to write an offer. Obviously, first offer took a hell of a lot of time. Now, everything is pre-filled, I imagine, and you guys are just popping in the relevant price, how much earnest money, probably that is always in there. It's the same company probably buying it, right? Yeah. It's probably 2-3 minutes to put out an offer because generic letter you're sending out, right? Hey, this is the offer. But when you look at, kind of the amount of time spent versus the amount of money or equity, cash flow you're going to make, it's almost there's not anything else you can do where you can make that kind of money, correct?
Yeah, then you got to actually fix up the house and find a tenant. So, I think that going forward this year is something that we're really focusing on is, okay, how do we go about this more efficiently? Like, how can we fix up these houses and still write the same amount of volume of offers, And so that's something we're thinking about. But, yeah, for us, like, the more offers we write, that pretty much directly will relate to the number of properties that we get and the profit that we make at the end of each year. Got
it. So you're in high school, right? You finish high school, you kind of jump into real estate. What age did you get your real estate license?
After the summer I graduated. So I think I got my license at like 19.
At 19?
18, 19, yeah.
18, 19, right? That's what I think you have to be 18 or 19 in Illinois to get your license even. So it was pretty quick for you. Mm-hmm. Okay. So because where I'm going with this is clearly not only are you buying rental properties, you need a way to make a living, right? Which is, you got to feed, because you're not necessarily taking all the money from rentals and spending it all. You're putting it back into the business, right? How are you making a living as far as your daily expenses?
Yeah. So last year we did a number of flips.
Okay.
So we've lived off of that income, and we did a bunch of wholesales as well, and I'm an agent. So every time we buy a property, I get a commission on that, just for representing us. So kind of the combination of wholesales, flips, and agent fees, that's what we were living on. And going forward, I think we're going to really ramp up the number of wholesales that we do, try to grow that and live off of that, and maybe keep some more as rentals and do a little bit less flips.
Okay, got it. So as far as on a flip in general, right, what is the target, what is the price range in which you're selling the property in? Right? Are you doing bigger properties, smaller properties? And then what is the average profit you want to make and what is reality?
Yeah. So, I'll be honest, the flips kind of have been a little bit harder than some of the rentals for us, and that's why we've gone towards more rentals recently.
Right.
But we've made profits on flips. So we kind of have a range. A lot of the properties that we're buying at 120 to 140. putting 40, 50 into it and then selling it around the 250 mark.
Right.
And those, I mean, on paper, we were hoping that we would make 35. Maybe we ended up making low 20s on those.
And I'm glad you said that, because like a lot of times, people have this impression, oh my God, I'm going to get in. He must be killing it, right? It's not. I mean, this is a smaller price range. You can plan on paper, hey man, it looks like I'm going to make 35. Now I think I'm going to make 32. By the time the deal closes, I made 25, right? I mean, this is just how it is, right? Because the margins are small, and they're small things. Offers fall through. I imagine that happens a lot in the areas you're selling in, right? You're selling the same property 2 or 3 times, right? So 25, 30. But at the end of the day, it seems like that you're not a guy who goes out, spends a bunch of money, right? You're living fairly economically, from what I can tell, right? So even if you make $100,000, $110,000, $120,000, you can manage to live, correct?
Yeah.
Okay. So flips, and how many flips were you trying to do last year?
Oh gosh. I mean, so at the beginning of the year, we kind of wrote it down, and we turned some of those into rentals.
Okay.
I think we sold maybe 5 or 6 flips.
Okay.
Throughout the year.
Got it.
Yeah.
So 5 or 6 flips, it was the thing. And then now you mentioned you started doing wholesaling also.
Yep.
So now these are properties you're buying from the MLS wholesaling, or are you doing off market?
Most of them are going to be on the MLS. We did 2 or 3 off-market deals, just that we happened to get.
Okay.
And yeah, I mean, with the MLS wholesales, we weren't making a killing. You're not making $20,000,
Right.
but if you can repeatedly make 5 or 10,
Right.
that fits right into our model.
Got it. Okay. So basically, you're going to make the offer anyways, right? You got a property under contract. It's a decent price, but there's a little bit of margin. So instead of you having to rehab it, if you just move it to somebody else, make $5,000-8,000, you're like, okay, at least it's better than poking the eye.
Yeah, and a lot of the times that's because we had our projects going on, and
Sure.
we're like, okay, it kind of be hard to take on another project right now. We got to finish these ones and then buy some. And so it's like, yeah, we wrote the offer anyway. We got the property. All right, we'll give it to someone else who wants it.
Got it. Okay. Got it. That makes sense. So as far as rentals wise, right? You live in an A area now. Like, did you sell that property after you moved out, the Winfield one?
Nope, rented it back out.
Oh, you rented back. What is it renting for now?
Now we're getting $2,750 on that.
Wow.
Originally,
And what's
so,
your loan on it?
like $1,200.
Your loan is $1,200. You're getting $2,750.
Yeah, we were getting, before we moved in, we were getting $1,650.
Right.
And then when we moved in, we just took over the payment. And then, yeah, right now it's Section 8 at the $2,750.
For anybody listening, and I mean this sincerely, probably the best gift you could ever give your kids, right? You have 2 kids. Every year, if you can, buy one house for them as early as whatever age they are, or at least one house for one child, one house for one child, the other year, one house for one child. I mean, literally by the time they're 18, 19 years old, they're multimillionaires, right? And a lot of times people don't understand that concept, that we try to make it very complicated than what it is. But I mean, that one house, I mean, if you want, you can pay it off in a hurry.
Yeah.
Right? And that's worth today, what, $350?
Yeah, somewhere.
Right?
In there, yeah.
Somewhere over there. It's just amazing what's possible if we have a little bit of patience, and you can, even with today's prices, pay off a property in 10, 12 years. Right? If you know what you're doing, you can pay it off in 10 or 12 years. I mean, it's just amazing. So now you have 10 properties, you said, with your dad.
Yep.
Right? Now, with all of these properties, how are you funding them on the front end? Are you borrowing private money from Mastery? Are you doing hard money? Are you borrowing family, friends? What's kind of your source of funds?
Yeah, so I would say for the majority of the deals, it's been family or friends.
Okay.
We use a Mastery loan every once in a while.
Okay.
And then we've used hard money as well. So
Okay, got it.
Kind of the full range of what you can do. We've done it all.
Okay, got it. And what would you say in the last, this whole idea of, kind of making offers on the MLS and not feeling bad if 95, 96% of them are getting rejected, right? How did you come up with this? Was it out of frustration? What was it? Because this is a very simple concept at the end of the day.
Yeah. I mean, like when you're new, you're going to these properties and you're spending a lot of time, which, I mean, you encourage, right? Go to the properties, look at them, run your numbers, analyze them. And so, when we were building the first 10, we still had that model, after 5 or 6 doors. We're like, okay, we're going in, we're writing the offer. And I just noticed like they just got denied. You know, we'd spend all this time going to these properties, looking at them, and then the offer wouldn't go through. And so then I was like, okay, let me just do it in reverse order. I'll write the offer first. If it gets accepted, then we'll go out, make sure it's a good deal. And then if it is, then we'll take it. If not, no worries, we'll back out. And so we kind of had that model. We were doing that. And then when my wife started working with me, when we started working together, we're like, okay, let's take this more seriously. And so there was a lot of discouragement there because my wife was the one looking for the properties. And I remember for the first 3 months, we didn't get any offers accepted. And it was just 3 months of just like probably 90, 100 offers, right? And she was like, this isn't working. Like, we're not getting any offers. And I'm like,
So how did you, I mean, like, did she come from a real estate background?
No.
Or what was, I mean, we call it, you know, kind of drinking the Kool-Aid or brainwash, but it truly, like, you have to really believe in something, right? To make that many offers and not get frustrated with each other that, oh my God, this is not working, this is BS, because that obviously tendency is there. It's going to happen, right? What was almost like the inculcation process for her to really take this on and say, yes, this is something I'm going to do and I'm going to take this seriously? Did you bring her to the 3-day? What was the process for her?
Yeah, so I think it was a combination of a couple of things. Number one is, I mean, I felt like I needed kind of a helper with managing all the tenants and everything like that. So that was one kind of thing that was in the mix. And then she was a youth pastor at the time.
Okay.
And where she was working, they were going through some financial trouble. And so they sent out an email saying, hey, you might get laid off.
Yeah.
And for 2 weeks, we were sitting in that unknown of like, we didn't know if she was going to be the one to be laid off or not.
Sure.
And so in that 2 weeks, we're like, okay, what are our options here? And so they ended up keeping her, but in our minds, we were already thinking about what was next. There was a couple other things that were like, okay, maybe this isn't the best thing long term. So at the beginning of that next year is when we said, okay, let's start working together and see if this thing works. And so going back to that story, for the first 3 months, there was a lot of discouragement there. We're like, all right, maybe this isn't going to work out. Like, maybe she needs to get another job or whatever. And then we were praying, like, what do we do here? You know,
Right.
We were having some discouragement. And then it was like 4 in a row,
Right.
you know, and it was kind of just like that. The tip of the iceberg started to come out of the water, and we saw the fruit of that after, 3 months.
And I ask that question because it's natural for anybody, if you're starting out something new, be it real estate, be it anything, right? That it's like for you may believe in something, but for the spouse to coming in this case, you guys are young, right? Really say, oh my God, this is really going to work. Because a lot of times when doubt creeps in on one end and the person starts questioning, hey, am I doing the right thing? This is really real. Is this possible for us, right? And a lot of times you get discouraged. You start questioning your own thing. Well, maybe you're right. Maybe it's not going to work, right? And that's a big deal, right? It's a big deal. But whatever things, you get small successes, right? And big fortunes are never built on huge successes. They're built on small successes stacked up together for a long period of time, and suddenly you have something. But I mean, you guys kind of broke through that threshold where it's like, oh my God, it works. And gives you more encouragement to kind of speed up the process.
Yeah, I mean, I think with everything, like, there will always be hardship along the way.
Sure.
Like, I think throughout even this last year, like, even through the success we've had, both of us have had some kind of discouragement.
Absolutely.
And what's nice about us is usually when someone's feeling a little bit of discouragement, the other person can encourage.
Okay.
And so that goes both ways, you know.
And did you bring her to the 3-day? I know she was there
Yeah, she's
a couple
come
of
to the 3-day.
times.
Yep.
Okay.
Yep.
Got it. Because that's kind of that philosophy, the thought process needs to be, you understand it, but it's like going to church, right? You could take somebody, or if you believe, if you're a Hindu, you go to a mosque, whatever, much easier to take the person to the place, right? And then rather than just coming from you. Because then it's, oh, okay, he's just my husband, he's just my boyfriend, right? But yet you take them there, the environment, the whole thing is, oh my God, it's not just him. It's not just, this is possible for me. And then the person walks out and they're like, wow, this will work. There's a transformation that takes place. So you've kind of used that as a tool.
Yeah.
Okay.
Yeah.
As far as rental properties, right? Clearly, you have some properties that are in A areas, and then I noticed you migrated to obviously Bs and some Cs, right? So, what areas do you buy and what areas do you avoid?
Yeah. I mean, like we'll write offers pretty much anywhere except for like D areas.
Okay.
And maybe C minus. So then it kind of goes to, okay, whatever offers land, some will wholesale. It comes down to, if we're going to keep it as a rental, we got to have the cash flow numbers there. So we got to know, what's it going to rent for? What's the mortgage going to be?
And what's your cash flow number that you look at? Net.
Yeah. 400 would be kind of on the low end of things.
Okay.
A lot of the times we're hitting 5 or 6.
5 or 6. Okay. Got it. So I noticed, I did not know that you had a 24-unit building, right? So the 24-unit building, how did you find that property?
So that one, we were looking on some of the more commercial building websites like
Sure.
LoopNet and stuff like that. And we found it on there. We ran some initial numbers. It needs some work. So we're doing some rehabs as people move out. We don't want to be the type of landlord to go in buy the building, wipe everyone out, and jack up the rents. That's not what we're here for. It's not what we stand for.
Sure.
So as people moved out, we've been renovating it and then trying to get a higher rent that way. So we found it on LoopNet. Went to the property, saw the units, and it all worked out there.
Got it. What did you pay for that property?
1.1.
1.1 million. You had to do a commercial loan on it.
So this one was seller financed.
Oh, nice.
There was a little bit down, and we partnered up with a friend and family member who gave us the money down.
Money down payment. Okay, got it. So basically, you did a seller finance on that. And how long is the seller finance for?
5 years.
5 years. Okay, got it. And at that point, there's a balloon due.
Yeah.
Okay. And what kind of cash flow do you expect once the building is fully stabilized?
So that kind of depends on how many units that we can renovate and
Sure.
raise to the higher rent, but should be at least maybe 7,000-8,000.
70,000 from the 24 units.
Yeah.
Got it. So for somebody kind of listening to this, they're like, oh my God, right? This is, how the hell is this possible, right? Where do you think, besides the hard work, besides all that kind of stuff, I mean, clearly that was needed, because at this point, is your dad still involved on your side of the business?
We've partnered up a couple times. Now he sold his business.
Okay.
And so now he's part-time there, just working as an employee, and he's starting to do more flips on the side. So I'm helping him kind of find those properties, and he's going to do those on his own. And I'll kind of just be there to help him out and help him find the properties, make the agent commission, wholesale fee, whatever that is.
Got it. Okay. Got it. So basically, pretty much now this is your business, this side of it.
Yeah, my wife and I, yeah.
Your wife and you. Okay, got it. So for people listening, what would you say to them, right? That we're in 2025, and what would your suggestions be to them in terms of how do I find a property?
Yeah. I mean, I think if you're starting out, it's good to go and visit the properties, run your numbers, see kind of what properties that are in need of repair, what they look like, get familiar with that. Talk to people about how they fix it up, see what the properties are looking like after. And then once you're kind of familiar with that, then, I mean, something that I would love to do is partner with, 10, 15 people and have them, maybe they're not writing 400 offers a year, but maybe they want to write 10 offers a week. And I would love to help them go through that process. We can streamline it, plug it into the systems that we already use, help them write all these offers if they're serious about scaling.
Right.
In the beginning, go to the properties, get familiar, and then, continue to write offers. Just write them, and eventually you'll get one.
So what you're saying is in the beginning, you have to go visit the properties.
Yeah.
Why? Because you don't know what you're looking at, right? I mean, it's like if you're going to buy a Honda, right? And you've never bought one, or the more of those you go see, now you're going to start figuring out, okay, what are the general things? But generally, then you'll know, okay, for a 2-year-old car, this many miles, this many this, assuming there's nothing crazy wrong with it, this is what I should be paying, right? I mean, it's no different with a house. As you develop more and more experience, now, because today, you're not going visiting the properties initially. You're writing a blind offer. Well,
yes.
A lot of people caught it, but it's not a blind offer in terms of you're just throwing, crap at the table. You have an educated kind of guess based on experience.
Yeah.
Right, and you're throwing in an offer. At that point, you're evaluating it. Okay, does it kind of get hooked? Does the agent call you back if they're like, yeah, we're kind of looking at an offer, or they counter offer, they do something? Then you go out and look at the property. Is that correct?
Yep. Yeah. If we get a counter offer and we're within 5,000, all right, let's run out there, see what it looks like, see if we can make it work at that point.
Got it. Okay. So you're kind of doing it backwards, and this is not a blind offer. This is a well-educated. Clearly it's based on your experience, right? And sometimes it's going to be a little too low. Sometimes it's going to be high. That's the nature of the business, right? Now, as far as general rehab on a property, because that's another whole headache part of the business, right? Who manages that? You manage that? Your wife manages it? Who manages it?
Yeah. So my wife goes out to the properties.
No kidding.
And checks up on them.
Seriously.
And then
Okay.
she'll, send pictures. Hey, this needs to be fixed. This is still not done. And then usually I'm the one to.
So she
to relay
kind of
that
now
to the
understands construction a little bit.
Yeah. Oh,
Right.
and she's got a way better eye than I do.
Oh, really?
Like if
Okay.
I go into a property, I don't know how, I'm not a very observant guy,
Mm-hmm.
and so I'll miss things. And then when she goes, she got that very fine tuned eye. And I mean, if it's a rental, it doesn't have to be perfect, but we have a standard that we want to meet. And so she goes there, takes pictures, and then I'm the one to relay that to the contractor.
Got it. Okay. Got it. And as far as like housing choice voucher programs and all that kind of stuff, you have a lot of tenants with that already, like Section 8 type of thing?
We have a couple.
Okay,
Yeah.
a couple. Okay. But you're still in some of these areas, you're finding a lot of market tenants?
We are. Yeah.
Okay.
Yeah.
Got it. Any bad, any bad experiences so far? Because you've been around now 6 years.
Yeah.
Right?
Yeah. I mean, there's always going to be bad apples.
Okay.
And we were on a really good track record up to this year we had like 98% on-time payments.
Okay.
And then this year now, actually, on Friday, we had to hand out 3 5-day notices.
Okay.
So we got one.
Well, but I mean, now you have a lot of properties too.
Yeah.
Right? I mean, so if you have that many properties, you're going to have 2, 3%, 5%, 6, 7% people are going to be behind. Out of that 2 to 3%, you're going to have to deal with.
Yeah.
Right.
I mean, it's still frustrating,
Yeah.
You wish it didn't happen. So we're working through a couple tenants now who, I mean, one of them hopefully is going to be out this Wednesday. She'll just leave and we'll find someone else.
Got it.
Keep her deposit. So the other lady, I don't know what's going to happen.
Okay, got it. And as far as, because for a lot of people, right, number one is finding the property, right? Number two is, well, I guess it starts with age. Oh, I'm too young, I'm too old, Anybody ever ask you, hey man, how old are you? Can you make an offer on the property?
I haven't got that. Maybe when I was first starting out, I got like the how old are you? Or like,
All right.
I mean, to this day, people will still make subtle comments, even to my wife and I both. Like, I mean, we bought a house in St. Charles, right? And we're going furniture shopping. And I mean, we just wore like normal clothes. I would wear an outfit like this to go furniture shopping. And like, I'm not kidding you, 4 or 5 stores we went in. Every single store, we would walk in and an older couple would walk in behind us and we would get skipped because of our age. And like, people would be like, oh, are you shopping? They said, are you looking for a couch for a basement apartment?
Right.
Your first apartment? And it's like, you don't even know how many apartments we own.
Right.
I mean, yeah.
No, but it's a good feeling, man, right? I mean, the feeling that, hey, I can actually, if I wanted to, right, buy whatever the hell I want and the credit card is going to go through, right? It's kind of cool when you're underestimated rather than when it's like, when you're like, oh my God, I don't know if I can afford it or not, right? So as far as financing wise, right, how do you decide whether, because if you're borrowing private money, you're going to pay about 2 points, 1% a month, right?
Yep.
With family and friends, you may have a little bit better rate worked out with them because now obviously you have credibility on that end. How are you deciding that?
Yeah, I mean, so we hit now, I mean, I kind of know what family members and friends have what amount.
Right.
And they like working with us and we love working with them. So, we'll kind of, okay, how many projects can we do with this person? How many projects can we do with this person? And then when we pay off one, we'll go and just line up another property. A lot of times their money isn't even in their hands for more than 2 or 3 weeks.
Right.
Because we just line it up that way. And so, if we're kind of tapped out, then maybe we wholesale the property or go with a commercial lender at that point.
Got it. Okay. That makes sense. So as far as in terms of areas, right, you said A, of course, areas, B and C's, right? And some of the areas you're doing, like Chicago area, south suburbs, right? Any unique challenges you've run in there?
Stolen appliances,
Okay.
break-ins, stuff like that.
And that's part of the business.
Yeah.
Right? I mean, if you're going to go to those areas, you're going to experience that much more than you will in Winfield. Right? I mean, it's just kind of how it is.
Yeah.
Right? So, Soren, I mean, you guys are both in your 20s, you and your wife, and you're already at 60 properties. Where do you see yourself going from here?
Yeah. Funny question, because I mean, when I was 18, I was like, oh, I'm going to get 25 properties and I'm going to retire on the beach, which we were talking a little bit about that before. And it's like now, like I've got this fire to like grow this thing, and I would love to get more and more properties. Yes, help other people get more and more properties. I mean, I have a lot of vision and goals for the future, and really, I mean, it all involves around real estate investing and the different facets that there are, like ramping up wholesaling, really helping other people grow their business as well, and in the meantime, grow my business too. So, I mean, buy more and more properties. Yes, I think this year another goal of ours is to bring on someone to manage the tenants. That's like a physical, tangible goal that we really want, because we're kind of feeling the stress of 60
Sure.
people who have your phone number who can call for emergencies, and showing all the properties that we have. So we'd love to get some more people on our team and scale up in a way that doesn't cause a lot of drag or weigh on us.
So let me ask you this. I mean, you have kind of the privilege in some ways of your family's own small businesses. You've probably observed, right, good and bad of it. There's some good things, there's some bad things. You have kind of seen us grow, kind of hack it together sort of thing. But you guys are early enough in your life that you can look at it and go, hey, we can actually design a life around it, right? We can truly have a place where we have enough cash flow coming in, and you're pretty close to it. We can live a fabulous lifestyle and be able to do things like build a family, be able to enjoy the money, have the time, and yet continue to grow. Have you guys thought about it as a couple on that end?
Yeah, I mean, we're ready to start a family this year.
Okay.
So that's like a big goal of ours, and something that we're working towards. And then, I mean, neither one of us are couch potatoes. Like, we couldn't just live off of the income and just scroll and watch TV. Like,
Sure.
I mean, we do a ton of things for our church. We volunteer for different soccer organizations. Like, I mean, our schedule in the last year has been jam-packed with a lot of good things. And we also are thinking through, like, okay, what do we need to cut out? Because it has been like a crazy busy year. And so for us, like, we're not just going to stop and do nothing. We're going to grow the business. We're going to grow in our network with our church. And I mean, that's a huge passion of ours, really. And so, like, this next weekend, we're going on a church camp with high schoolers. So we lead high school ministry, or not the ministry, but we lead a small group of people there. So we're going to invest in them this weekend. So we already do have kind of a sense of that freedom to, like, really pursue the things that God is calling us to do, like serving our church and serving these different soccer organizations. So we're super blessed. We're like,
And that's your way of giving back.
Yes.
Right? That's your way of giving back. That's your way of refueling, because now you get that sense of community, faith, all of those things together.
Yeah.
Right? No, that's awesome. I mean, and that's important, because a lot of times I think the chase is never ending, right? Because there's always somebody bigger, stronger, more beautiful, has more money. When you get 100, it's going to be, well, what about 200, right? Then 300. This is an unending thing, but it needs to be attached to something where it's grounded around your faith, your family, and other thing that's a higher calling. So, I mean, man, this is awesome.
Yeah.
So, Soren, you mentioned something about cutting certain things out. Explain that. What do you mean by cutting certain things out? Because most people in their 20s would be, man, I want to do it all.
Yeah.
Explain that.
I mean, and I think this goes back to this idea that the grass is always greener on the other side, right? If you have 50 properties, the grass is always going to be greener when you have 100, right? If you have 5, it'll always be better when you have 15. And kind of like addicted to the chase, right? And so my wife and I mean, this last year we volunteered in so many different areas. We've invested in so many different friendships. And I think in the past couple of weeks, some of those, we've had a little bit of discouragement, especially in the fall, with some of the areas that we did pour like our heart and soul into these things, right? And they just didn't go as planned, or whatever that may be. I don't want to get into all the details now.
Sure.
And so it's really caused us to be like, okay, like what is truly, truly important to us, right? And like we've skipped date nights to host different people at our house. And it's like, okay, maybe this year, like, I mean, we want to have the best marriage possible. And it's like, okay, let's really, really invest in that. And maybe we'll have to say no to hanging out with some of our friends every once in a while in order to make that a priority.
So is it like more of a purpose-driven life, right? There was a book written like that, right?
Yeah.
That I choose to, because I think you said it very well, that this is endless, right? 50, 100, 200 properties, whatever it is, or how many countries can I travel to? That's the latest thing. I've been to 80 countries, 90. I mean, it's endless, right? There's a lot of beautiful places to see, but instead of just the chase that, hey, this is the purpose of my life, this is what I choose to do, and that is what is gonna bring fulfillment, rather than just chasing for the for the sake of chasing, because it's an endless thing.
Yeah, I think it's important to be mindful like of your why, right? Like, why are you going to buy real estate? Why are you going to buy properties, right? And I mean, at the end of the day, the money, whenever we die, like, it's going to go away, right? We can't take that with us. And so for us, like this year, it's like we spent a lot of time investing in these things that we thought were good, right? And that probably are good, but it's like, okay, like what really this year, what do we envision our family to be like? What do we envision our relationship with each other to be like? And what are some areas that we really feel called above the other areas to invest in? And I mean, the word invest, right? We invest in real estate, but we're investing in high schoolers. We're investing in our friendships and other young adults, people at our church. And so like thinking about where to invest our time and our energy and our resources to bring fulfillment to us, and also just bring glory to God. And
so I guess the question goes back to, right, what are you cutting out? Which is not necessarily cutting out, but you're choosing not to do it all, because you can never do it all, right? And you're choosing, okay, these are the things I'm going to choose, so I don't really have time for a lot of other stuff, because this is really going to fulfill my purpose more so than just money.
Yeah, and this is something that we can totally grow on. We're both people, like, if you say, hey, come over on Friday for this party, like, we're the first ones there,
Right.
And so we really have to learn, like, okay, like, we're going to prioritize each other. We're going to prioritize church. We're going to prioritize this group of people. And some of the other things, like, as much as we want to be there, like, it's just not healthy for us in this season to be there.
Got it. Very well said. Anything I may have missed?
In terms of just, like, overall?
In terms of any comments you want to make? Because, I mean, we wanted to have you because we've kind of seen the whole gamut, right? All the way from the beginning, you could kind of walking in clueless and lost, right? I mean, you're, for God's sake, you're 17 years old, to now, right? Anything you want to share with the audience?
I mean, I think, like, I would not be where I am without the partnerships that I've had, right, with my dad, and I wouldn't be where I am without my wife. And so I think, like, thinking through those things, even at any age, I mean, I think partnerships can make you go far beyond what you can do alone, especially, like, when you're young. Like, I know if there's probably young people watching this, right, young people around who want to invest in real estate, and I think finding a good partner to get your foot off the ground, get those first couple deals, have them show you the ropes, and then maybe allow you to handle and take the lead on some projects is just such a wonderful thing to have and a wonderful thing to do. And so, I mean, I'm just so grateful for all the partnerships that I've been able to have, and like mentors like you and so many other people. Like, learning from other people's mistakes is also such a great tool. And everyone's going to make mistakes on their own. Like,
I mean, I couldn't, man, I couldn't agree more, because I think a lot of times whenever you're starting out, especially when you're young, right, you don't have all the resources, you don't know what you don't know. And a lot of times we're all blessed with different things, right? Not everybody is going to have one thing, but maybe you have. And so use that as a crutch, use other people where they help you grow. Hopefully you can contribute value in some meaningful way to them. I mean, 100% for me, I would not absolutely be here had it not been for different types of people showing up. And 95% of the things worked out, but even the other 5% didn't. At least it got me here, right? Not everything is going to go perfect. I mean, that is what it is, right? And at times I've had no, my God, why did I do this? But guess what? Even when things are not perfect, did I benefit from it? Absolutely, right? And so, very well said. Congratulations from bottom of my heart. This is so exciting to see. And I was expecting, I'm like, man, 23, years old and 25 properties, but I'm holy shit, right? I mean, this is really, really awesome. Now the biggest thing is not to screw it up, right?
Yeah.
To keep the main thing, nice sustained growth. Because if you just keep up a good sustained pace, I mean, by the time you're 30, you end up with 200-300 houses, man. I mean, this is I mean, I'm jealous, right? I mean, this is just absolutely, absolutely awesome. So from all of us in Mastery, all our friends, congratulations to you, to your wife. One of these days, you got to have your wife come also.
Yeah.
This would be fun. So guys, for everybody listening, you're listening to Cashflow for Life. This is Andrew Holmes. Please like, share, and help spread the word. That's how we get to grow. If you know of any other guests that would make for an inspirational, something we can learn from, please make sure you let us know. Thanks a bunch. Have a good day.